Hi everyone, and welcome to this little review for the performances of the stocks in the Dow Jones Industrial Average Index for the month of January 2012. First of all, I have to warn you that this discussion is far from being technical or supported by either sophisticated financial analysis tools or expert opinions. In point of fact, I'm not an expert, and this is just an experiment trying to visualize data from a different point of view. The goal here is simply to offer an overall perception of some of the movements that take place every day in the financial markets all around the world, and that at the end of the day give shape to the figures reported in the evening news. I do this because I really like the overall effect of the chart we are going to discuss, because I believe that this stuff may be worth following and spend some time thinking about it. Because, well, you know, the economy and the behavior of financial markets actually shape our everyday lives, particularly nowadays. So, as I said, here we'll take advantage of this beautiful chart where each stock gets displayed as a point. The higher the point, the bigger the return or the gain of the stock. The lower the point, the lower the gain, or the bigger the loss. At the same time, if a point moves to the right, that means that there is excitement around the stock, and the chart over time would have a shape with big ups and downs, while points to the left have prices that are changing in a more steady way. If you want to know more about this chart, please watch the video which goes through it with some additional detail. Okay, let's start with the Dow Jones stocks January 2012. Right after Christmas 2011, we start with a rather flat day, but this may be the calm before the storm, and in fact we immediately see this kind of drop, mainly driven by some not so good news speaking about recession and problems with the debts of some European countries. You see that the banking and commodity sectors both tend to react in an exaggerated fashion to this news. First of all, because banks are especially sensitive to economic conditions. This is also true for construction equipment manufacturers. And second, because companies such as Bank of America and Caterpillar carry considerable leverage on their balance sheets, and this amplifies both the good and the bad. But then, investors seem to have forgotten all about yesterday's concerns, and some favorable housing and Europe news, such as the Italian long-term bond auction, well, at least there were some buyers, drive some gains with financials leading the way, but also with the Hewlett-Packard and Intel looking in good shape. The last trading day of the year has no fireworks. On the contrary, the volume is quite low and we see little movement. Probably because very few people are still following the stuff and they're getting ready for New Year's festivities. At the beginning of the new year, the Dow literally explodes out of the gate. Maybe it's the January effect, or maybe the effect of some good news just arrived. The point is that some prices suddenly rise. You see in particular Alcoa, JP Morgan and Bank of America. As usual, commodities and banking tend to swing widely on favorable and unfavorable economic news alike. Another reason why this happens is because commodities are cyclical with the economy and financials are so tied in to the macro issues. Then there are these quiet days where the Dow's barely moving. And it looks like the New Year's celebrations are finally over, except for Bank of America, going against the grain and rising a lot. And the first week actually ends with the Dow's on a roller coaster ride. Then we can see some highlights, in particular Caterpillar building out its presence in China and United Technologies getting a $1 million contract from the defense to produce a bunch of jet engines. Note that we also entered in the earnings season. Some relatively calm days follow, till Bank of America and JP Morgan decide to explore the world and leave the crowd. This is another kind of explosion near the end of what is probably the best week since Christmas, with strong earnings from tech stocks like IBM and Intel. Can say the same thing for Google. And here we are, January 25, where the Dow Jones rises on Fed news saying that the interest rates will stay very low at least till 2014. The index seems generally rising, while CAT is left alone in positive returns area. This was the last full week of January, and well, the bottom line is that it was a rather nice month for the stock market. In fact, the overall return of the Dow Jones has been 3%, which roughly corresponds to an average return per day of 0.13%. But as we've seen, a lot of movement took place during these days. Okay, this ends the January review. Hope you like it, and if you want to see what happens next, then we'll see each other in the next video, so stay tuned. And as always, thank you for watching. Bye!